were looking at a reversal from the opening trade to a complete bloodbath in the afternoon. Here you're seeing a very strong recovery, which is honestly heartening. When we have all of these conversations about the strength of the Indian market, you're seeing it in action. Just a few stocks that are on radar today. Oil India. I'm going to pull up Oil India. Second straight day. Even yesterday when things were looking tough, Oil India was doing very well and continues to do so. It's up about 6%. So a whole host of reasons. There are a few positive brokerage reports, but more than that, I think windfall taxes which have been cut by the government is positive for Oil India. Crude prices are looking like they might move up. So a whole host of reasons over there. I'm going to talk about IIFL Finance and Piramal Enterprises. Both companies came out with clarifications post the RBI's rule on AIFs and downstream investments, and both of them have talked about what exactly those investments are. The market's not taking it too well, to be honest. So Piramal Enterprises, the concern over there is that they have to adjust about 3,100 crores. They have to provide for 3,100 crore rupees on their books. So that stock was down even further, but has recovered now. It's down about 2%. IIFL Finance's clarification came a short while ago about what their kind of investments are in AIF, and that has also seen a bit of a cut. I'm going to talk about Indian Bank. The QIP has ended, and since that, you're also seeing a 5% cut on that stock. Let's look at the new listing. Inox Industries. Perhaps this morning, the management must be thinking that, we were a bit unlucky for the listing today. But the company in itself has shown strength and resilience. We'll play out a bite from the management, a slice of that conversation we had, and it's seen a superb listing, still holding on to its listing gains quite robustly in what has otherwise been a bit of a volatile session. I'll talk about Z Entertainment, because today is the deadline, or was the deadline for merger. That deadline, of course, will be missed, but that was expected because Z wanted the deadline extended. Sony yesterday said, well, we've not even heard from Z. And that's when the stock was looking like it was in a bit of a weak territory. Now, however, Z has come and said clearly that they are in conversation with Sony. So those hopes are up. That stock up 4%. It has been up through most part of the day. Just a couple more I would add if we can. Bandhan Bank, they've approved an NPA transfer. And you've seen a bit of weakness in that stock. 775 crores off their books is going to be transferred to an ARC, and a bit of weakness there. Overall, all banking stocks have not done too well. The finance space is under a bit of a pressure. Just Tarsons, if we can pull up. Tarsons is going to, an arm of theirs is going to acquire a German labs disposable distribution, and look at the performance on that stock. So where you've seen news in these counters, positive news, you have seen the response also bounce back pretty well. Niraj, and in that sense, I think the one-word caption for the day would be resilience, recovery and resilience.
Certainly, most certainly. You nailed it, Tamanna. And in fact, let's pose that question to Kunal Shah, Senior Technical and Derivative Analyst at LKP Securities, because we've held on to those levels that our experts in the morning had suggested. Wonder if Kunal was working with the same. But Kunal, good afternoon. How would you describe this trade today? Bouncing off key support levels, or is this too soon to call?
Good afternoon, Niraj. I think definitely I can say it's a very good bounce what we have got. Even in today's, for our client, we had mentioned that one-day sell-off cannot be considered as a complete change of trend. Follow-up move is required for the entire trend to continue. But we can see a sharp recovery coming in. This is what we are expecting, 21,000 to hold on the downside, and for Bank Nifty, 47,000 to hold. And exactly that is what has played out. So still the undertone remains bullish. We have a positional long view on Nifty towards that 22,000 mark for the very near term. So we continue to remain bullish. Whatever dips you get in either the Nifty or the Bank Nifty index, utilize them to buy. I think this was just a knee-jerk reaction what we had. We are clearly heading on the higher end, surpassing even 21,500 and going towards that mark of 22,000 on the upside.
Kunal, what leads this higher? Is it banks, is it oil and gas, or is it IT which has shown some spunk last week?
So I think there will be a mix, a combination of a lot of things.
Of course, but still, the favorite?
Yeah, but I think private and PSUs are something which are my top favorites. And that is where the real momentum will start to pick up. You are already seeing an HDFC Bank giving a fresh breakout on the technical charts. So I think that is going to be a major contributor for Bank Nifty hitting that 50,000 mark. ICICI Bank looks very good on the chart. So that is where again the momentum will start to pick up. PSUs, SBI, Canara Bank, Bank of Baroda. These are some of the large cap names which are also looking very good. So I think banking in itself, private and PSUs both will be doing well. And that is why I see the push coming in the Bank Nifty index.
Okay. And Kunal, just what are the top ideas for this afternoon?
So firstly, ICICI Bank, as we discussed, that is my first top idea from the private banking space. The stock has recently witnessed a correction, and now that correction is over in today's trading session. We are likely to see a good up move in the stock as well. So one can initiate long ICICI at current levels. I'm expecting short-term targets on the higher end of somewhere around 1020 to 1030 on an immediate basis. 985 should be acting as a support on the downside. And even if you talk a bit about positionally, even 1070, 1080 can be achieved. So ICICI Bank is something which is looking very good to me on the private banking space over here. The second stock, which I think where the fresh momentum will likely to build up, or in fact, even if I talk about a sector specific, I think a good momentum could be built up in FMCG space. So Hindustan Unilever is something which is looking very good on the chart perspective. Already defensive names were doing quite well in the last 1 to 2 days. And Hindustan Unilever can, from the current levels, easily see an upside of 50 to 100 points. So 2570, somewhere the stock is trading. One can initiate long positions, keeping a stop loss of 2520, looking for targets of 2630 to 2660 on the upside.
Hi, Kunal. Good afternoon. Tamanna here. I just wanted to get your take on a clutch of diagnostics which have been doing fairly decently. If you look at, Metropolis, Dr. Lalpath, if you look at Vijaya, all of them have seen a robust uptick. Perhaps could be a couple of reasons. Could be, this COVID tests might start again. You might see them increasing rates also next year. But more on the technical side or on the chart side, what do you make of a Metropolis? Any of these on your radar?
Yeah, I think if I look at the entire sector, I think there's still a broad consolidation, or you can say a base formation, which is happening. So probably just the fresh momentum because of the COVID, what the stock have got, and that is why we are seeing an uptick. But one stock which I would like to particularly highlight over here is Metropolis. Now, Metropolis, if I look at on the technical charts, a rounding bottom has been already formed on the technical chart. The stock is on the verge of breakout. So 1800 has been a very strong resistance for the stock. We on the lower time frame, the base formation has happened. So I'm preempting this breakout to happen. So that is something which is looking very good. Currently trading at 1700. So probably more 100-point upside the breakout is. But one can definitely start to initiate long positions even at the current levels, looking for a good strong support which has been formed at 1660. For targets first 1800, which is the resistance of the breakout, and post that breakout we can see a sharp rally towards 2000. So I think for a next 2 to 3 months perspective, I think Metropolis could do very well.
I want you to hold on to that thought. We had a very interesting conversation this morning with Saurabh Mukherjee of Marcellus Investment, and he talked about why he's big on India's healthcare and diagnostic sector. Listen in.
We've been big investors in diagnostics before COVID. We'll be big investors in diagnostics regardless of whether the next wave of COVID comes. And here's why. This is a sector which is roughly $10 billion in size. There's only 4 or 5 well-managed, organized players, and they account for only 20% of the market. 80% of the market is fragmented, it's mom and pop. Private equity and venture capital money had briefly entered the sector during COVID. Most of it has gone away now. So the incumbents, the well-run incumbents, have plenty of pricing power. That's been very evident over the last 12 months. Their pricing power has been evident. So, for example, Dr. Lal Path Labs, if you see in the last couple of quarters, profits are up 40-50%. I suspect that will continue. So this is part of our large cap portfolio, consistent compounders, and the mid cap portfolio. Similarly, Vijaya Diagnostics, which is in our small cap portfolio, has been consistently gunning out 25-30% profits over the last 4 or 5 quarters. In fact, they acquired a firm in Pune yesterday. So I think consolidation will be the norm in this sector as well-run players, Dr. Lal in the north, Vijaya in the south, as they buy the mom and pop shops out. As India gets richer, as India gets wealthier, older, there is bound to be more demand for these services. Pricing power is high for these guys. Return on capital is 35-40%. That means they generate a lot of cash, which they're using to consolidate their regional markets, and will happily sit there and make money, I think, for many years to come. The broader healthcare theme, healthcare, hospitals, diagnostics theme in India is very exciting, and we've been putting money to work in that. So we bought Rainbow Hospitals in our small cap strategy in August, and we'll see if we can put more money to work in healthcare and diagnostics in India.
Well, the stocks have had a mixed bag today, but Metropolis, Dr. Lal, certainly doing well. So those are not the only volume buzzers. Mihika Barve has a list of some of the key stocks which are moving ahead on very high volumes, or maybe correcting on very high volumes. Mihika, good afternoon.
Good afternoon. So first we have Army Organics, which is up 57.61 times its 30-day average at the volumes today, and it reached an intraday low of 5.56%. Now this was on the back of a large trade where 43.4 lakh shares or 12% equity changed hands in a large trade that was worth around 475.2 crores, but the buyers and sellers are not known immediately. Then we have a Tarson's Products where the volumes were up 18.76 times its 30-day average, and the stock reached an intraday high of 18%. And this was on the back of the company saying there is acquired German medical distributor called NERB for about 10 to 15 million euros. And the acquisition will be done via its wholly owned subsidiary Tarson's Life Science. And it's a strategic acquisition which will help it, the group enhance its line of business. Then we have Indian Bank, which is up 7.42 times its 30-day average and reached an intraday low of 9%. And this was because of the latest QIP shares that were allotted, where 10.15 crore shares were allotted, which got listed on exchanges today. Then we have a Metropolis Healthcare where it was up, the volumes were up 6.36 times its 30-day average, and the stock reached an intraday high of 8.3%. And this was on the back of the resurgence of the COVID cases and the likelihood of COVID testing coming back in. As of now, the active cases of corona in the country are around 2,670, with 354 cases reported in the last 24 hours, and 300 of them are from Kerala itself. And lastly, we have an IIFL Finance, so the volumes were up 5.78 times its 30-day average with an intraday low of 7%. Now, it was the second day that the company was seeing losses after the RBI barred regulated lenders from investing in AIFs, which have investments in borrower firms.
Thank you for that, Mehika. Those are some of the buzzers of the day. Mayuresh Joshi now joining us, Head of Equity Research India at William O'Neill. Mayuresh, very good afternoon, and it's turning into a good afternoon from what was looking like a very choppy morning and quite different from what the day seemed like yesterday. So first, I want your take on where you think the strength is coming from and what really has changed in the mood. Do you think it's a realization that, yes, a little bit of a cut is an opportunity to enter the market? There is enough dry powder waiting on the sidelines.
Afternoon, Tamanna. Yes, that seems to be the case. And a lot of cash is waiting on the sidelines, both domestic money and a lot of foreign flows as well. Having said that, the kind of fall that we saw in the markets yesterday, more of profit booking, if one has to believe. And a large part of the structural story that India is going through, both from a macro perspective as far as the developing and the emerging world is concerned, and the micro perspective where earnings are holding up pretty nicely. I think a combination of both these factors is not going to change the structural landscape that India is going to go through in the next few quarters. China is going to take some time to revive, and till that happens, fund flows in the scenario of a rate cut possibility in the second half of the next calendar year will also mean more flows coming into India. Broader markets, yes, have been overextended in certain pockets, but to a large extent, I think the exuberance for Indian markets might very well continue.
Okay, Niraj, stay on. So much more to talk about. We need to slip into a quick break. On the other side of the break, we talk about the stock of the day, try and get you some more perspective from our experts, and hear out some other voices which have spoken to us during the course of the day.
back. India market close, and we are looking like we are set for a pretty good close. The Nifty 50 comfortably sitting over the 21,200 mark, and you are seeing a whole host of plays perking up going into close, including the Bank Nifty. The Bank Nifty up nearly a percentage point. But I want to talk about two companies specifically in the NBFC space, which have a bit of news coming in. So we know that the RBI has recently said that AIF investments by banks and NBFCs have to be looked at very closely. So lenders are scrambling to fix those issues as well related to their investments. Statements have come out from IIFL Finance this afternoon, and even Piramal Enterprises in the morning, disclosing the extent of their AIF exposure and investments. I've got Mimamsa now with us, who's putting that all in context. So Mimamsa, just break it down. What have these two companies said, and what does it mean in terms of their exposure?
IIFL Finance, after Piramal Enterprises has disclosed its exposure to AIF investment, which stands at about 182.44 crore rupees. Now, out of this, 21.37 crore rupees is the company's investment in IIFL Fintech Fund. But the major chunk of AIF investments is held by IIFL Home Finance, so which is about 161.07 crore rupees. But IIFL Finance says that the home finance company is adequately capitalized with the capital adequacy ratio of 47.55% as on September 30. So they have not really disclosed whether they are going to liquidate these holdings or they are going to provide entirely for the investments, against the investments, which is what RBI wants these lenders to do. So the RBI has directed lenders to either liquidate their holdings or to make 100% provisions, but liquidation has to happen within 30 days. So that time period is pretty short for lenders to look for a buyer or sell off these assets, because these are essentially illiquid in nature. So if IIFL Finance has to liquidate the holdings, it would impact the CRAR, which is the capital adequacy ratio, by a margin to 46.39% against 47.55% at the end of September 30. Now, for Piramal Enterprises, they will have to set aside provisions of rupees 3,164 crores against its investments in AIF units. Now, this is a significant hit in the company's net worth. Like Jefferies yesterday had estimated that it is going to impact the net worth by 10%, and the net worth stands at 28,710 crore rupees at the end of September quarter. So, talking about the specifics of Piramal Enterprises, the value of AIF investments held by Piramal Enterprises and its subsidiary Piramal Capital and Housing Finance, it stands at rupees 3,817 crore. One more thing to note is that out of the provisions that Piramal Enterprises will make, which is 3,164 crores, 1,737 crores is invested in three entities, which are the debtor firms of Piramal Enterprises, which is exactly what RBI wants to curb, which is called the evergreening of loans.
And that attempt has begun. Both those stocks are seeing pressure in trade. Piramal Enterprises, though, has recovered a fair bit from its day's low. I'm going to go across to Kunal first. Kunal Shah, on both these counters, IIFL, Piramal Enterprises, are you tracking them? And anything in the NBFC space that you think is a buy at this point as per the charts?
Yeah, I think if we look on the technical charts on the NBFC space, yes, we have witnessed some disruption over there. But I think IIFL Finance is something which still looks very interesting for me. The stock is taking on the technical charts a support around its 100 EMA. So that's where we have found again support-based buying with volumes. So I think one could initiate again buy at the current levels. Because there are multiple times, if you look on the technical charts, 580 has been a very strong support for the stock. Whenever it has touched this level, we have seen a sharp recovery. And again, the same thing has happened in today's trading session as well. So 580 is something which one could hold on to downside for a support. And one can again look for a recovery towards 630, 640 levels on the upside.
Mayuresh, any view on the space and the kind of statements which both companies have made. The good thing is that there is disclosure. The good thing is that they have to provision for everything. At least in IIFL's case, they're not provisioning for a maximum of the amount, a majority of the amount, unlike Piramal Enterprises. Any views here?
No, so I think the street will want to take this in the stride till the December quarter numbers are out, and specifically what has been undertaken in respect of the AIF investments that they have probably done. So I think to that aspect, the street will still have some elements of doubt on how much is the actual amount involved, how much is provided for, and what kind of a hit will one take in terms of balance sheet because of the provisioning. Obviously, I think individually, if you look at the standalone numbers, Tamanna, for PEL in particular, what you probably expected to see or were expected to see in terms of the drawdown of the wholesale book and expansion of the retail book per se, along with the acquisition of the VHFL book that they've probably done, and the provisioning on that book as well. I think there is some way to go on that aspect as well. And on that aspect itself, I think to have a higher multiple given, the street wants to see some consistent performance. Add to that what probably comes through in terms of elevated provisioning on this count as well. So to that extent, wait and watch for both these counters. I think the top rung NBFCs are better off at this juncture.
Okay, so the question that will only come to mind is for how long does the pain continue, and is this larger conversation around what's happening to some of these NBFCs and the RBI view around the lending, whether for these set or others, whether that view remains strong, and does it hamper growth? A lot of, I remember my colleague Vishwanath doing a story about how one of the small finance bank was growing at a much faster clip than what was prudent as well, and some of those also were brought down. So interesting set of stocks, interesting set of businesses to look at. The other set of businesses which look very interesting are upstream oil, right? So upstream oil has largely done very well, and we'll talk about this after this break. But just before we head into that break, watch out what's happening to Oil India, ONGC as well as Reliance Industries. In today's session, we've seen some fairly strong gains for Oil India, yes, but ONGC started off as a strong one. 2 was up about 202 or 203, so it's now just quietened a bit, but it remains something that brokerages or analysts have said is worth a buy. And Reliance Industries too has had its day in the green, so that too is doing okay. So maybe ONGC is an exception, but some of the others have certainly done well. Can we just very quickly see Hindustan Oil Exploration and what that stock is doing in the session as well, just to see if indeed all upstream oil companies are doing well. HOEC about 1.5%. I guess we need to slip into a quick break maybe. Now once we are back from the break, we'll of course get you what the derivative space is showing, and then a focus on the recent IPOs, including some which have listed today.
watching India market close, and we're set for a pretty decent close considering where we started. But what has the Nifty expiry look like? Let me go across to Agam for more on that. Agam.
0.5% gains for the benchmark. It's something that not a lot of traders were expecting to come through, but we have seen about a short covering, and that's very evident in the kind of numbers that you're looking for when it comes to the Nifty futures. Unwinding of nearly 10.5%, that's clearly short covering, even as the underlying advances by around 0.5% at the moment. Coming down to the Nifty Bank, the picture as far as the Bank Nifty is concerned is not very different. An up move there, along with an open interest dwindling down to by nearly 7.5%. So short covering seen there as well. With the Nifty Bank not too far away from the 48,000 mark, which tends to be a little bit of a pivot point over the previous few sessions. As far as your options market is concerned, as we move into trade next week, once again, we continue to see a little more resistance around 21,500 based on the accumulation in calls. In terms of changes in OI, today we have seen a little more around the exact same levels and those very same strikes. We're going to go in through the options expiry today, but as we move into the final trading week, or rather the final trading expiry for the year, well, we're going to keep an eye on 21,000 as far as the Nifty is concerned, because that's where we've seen further cementing on the Nifty downwards. Let's talk about stocks then, and we have seen a little bit of a resurgence in stocks as well. So yesterday we saw a whole host of these counters which were in the red. Today they're all in the green, with an increase in open interest towards fresh longs. So Apollo Hospitals, Coforge, Shree Cement, Balakrishna Industries and GMR Infra looking at longs building in. And we are also looking at about a short covering in India Cement, Exide, PI Industries, Voltas and India Intermesh. On the whole, it's turned out to be a fairly decent expiry, especially providing relief for those traders who were long in the markets.
Yep.
All right, thanks a lot for that, Agam. So those are a few stocks to monitor. Remember, on the first 35 minutes or 40 minutes, we've covered some volume buzzers, some stocks on which there is palpable long and short build-up as well that is happening. And just for the benefit of our viewers who are tuning in right now, every morning at 8:30, ahead of the markets, we do a segment on what are the option strategies that you can make use of for the day's trade. So I think if you are a derivative trader and looking at options, there are some nuanced pieces that we're doing every day which you might want to log in for. But back to markets currently as they stand right now, and what's happening at the broader end of this, or more importantly, what's happening at the IPO end. I think just the kind of moves that have happened in some of the listings have been spectacular. So if I'm not wrong, my colleagues Agam as well as Samina spoke to the management of Inox India upon their listing today. It might be worthwhile to hear out what Inox India has to say. They made a strong debut, listed at a 44% premium. Siddharth Jain speaks about what the listing means for them and the potential opportunities in the future. Listen in.
Past 7 years, we've been growing at about 20% a year, a little over that. And, you know, we see enough visibility that we should be able to continue the same trend going forward. Our product is a CapEx-related product, and it's connected to global CapEx. The new applications of cryogenic tanks, as I mentioned earlier, was to do with hydrogen and LNG and the cryoscientific division. As we see the consumption of these green fuels going forward, we never know where the market can take us. But I think we're in a very strong foundation with great opportunities in front of us, and we've developed a very strong reputation. And with this listing, I hope it's going to help us get even more global business going forward.
So we had an interesting conversation with Hiren Ved this morning, and he also spoke about the kind of interest that is coming into IPOs. It's a very pertinent comment coming at a time when you have at least 8 IPOs lined up in the next few days. Listen in to what he said.
Look, small and mid caps don't go for time correction. They always go for price correction, right? First the price will correct, and then there could be a time correction, right? So I think, look, I mean, in a longer term bull market journey, it's very common to have these kind of sell-offs. And as I said, you could attribute it to anything. I think there was, clearly there is euphoria, at least in 2 or 3 areas that one can see. We don't operate in the SME segment, so I can't comment much on that. But it's very similar to what's happening in the IPOs, even on the main board, right? And there is a joke in our office that if existing promoters would take their companies private and then go IPO again, you could have a 40-50% higher market cap, right? It was a joke. So I think this every IPO getting oversubscribed 20, 30, 100, I don't know how many times, and then you getting a 50-70% pop is unsustainable. So there was clearly froth in the market, especially in the IPO market. Also, to some extent, while PSUs have been the leader of this rally, right, the entire pack, whether the banks and the entire cohort, but I think it was just getting a little ahead of itself as well, right? So I think there was some sanity that was required, and I think that sanity is setting in.
Okay. Yeah, some of these IPOs have done really well. We'll take a technical view too, but first, Niraj, on today's listing, Inox, sound listing again. Some of the IPOs which closed yesterday for subscription had some brilliant subscription numbers, including a jewelry company, never mind the concerns red flagged on social media. Any thoughts here on any of these?
I think it's just crazy out there, Niraj. And I would totally agree with what Niraj had to say. I think the frenzy surrounding IPOs, because there is such a feeling of missing out on the humongous rally that we've probably seen in the last few weeks. The kind of subscription numbers are mind-boggling. Having said that, with the subscriptions and the kind of openings that these IPOs are getting, the valuations that they are trading at are just not sustainable. I'll just give you a very quick example. Yesterday, Domes listed at a significant premium. Now, if you look at what Domes listed at and the existing market for both pens, pencils, highlights, and markers, expected in FY25 is close to 9,500 crores. Dome's market cap yesterday itself was around 8,500 market. So somewhere I think there is a huge mismatch that is probably happening at this juncture. Valuations are out of whack. And if they are not able to, for some reason, sustain the kind of earnings momentum that the stocks are now opening at in the subsequent quarter or two, you can probably ensure or see a significant amount of crackdown happening in prices. So just not sustainable for Inox Wind. Obviously, the spaces that they are in, cryogenic technology is something which is going to pick up big time over the next few years. Obviously, the usage in terms of this technology and the product mix that they've got has ensured that the top line growth has been consistent about that 20 to 25% mark for the past few years. Margins have been relatively stable as well. And because of that, I think the kind of order book, if I'm not mistaken, close to 1,000 crores, is only expected to increase going forward, giving revenue visibility. But again, the kind of listing that it has maybe the revenue growth path is out there over the next few years, but it does need to settle down. And therefore, I think if corrections do come through, or it does make an IPO base as we look at it at Markets with India, it would make sense. Not getting into the frenzy of getting into IPOs after such heavy and good listings.
Have you stayed away from all the listings or any that you found interesting at all? I mean, some would say you can't paint everything with one brush. So have you found merit in any of these companies? And any that you feel you would definitely stay away from? So
again, Tata Tech was a very reasonable one, but look at where it opened up, Tamanna. So I think there is no way that you're going to chase Tata Tech after a 125% opening. Flair, DOMS, they are in good spaces because what you're probably looking at for the organized players is that they are going to increase their market share going forward from the unorganized players. But as I mentioned, the overall market itself is expected to be of a certain size, and a couple of these companies have already exceeded that market cap by quite significantly. Herrera was a very good listing, but again, I think the kind of moves that happened on IREDA. We were probably ensuring that we initiate coverage on that. But the stock just didn't give us a chance in terms of the moves that probably happened. So yeah, there are good spaces like IREDA as an example in terms of renewable financing. You probably got these pencil maker, but they have to cool down. So I think there are some qualitative stories out there, but valuations are just out of whack at this juncture.
Yeah, valuations is the big question. Kunal, I want to come to you on another couple of stocks that have seen great news flow, Cochin Shipyard and Mazagon. Both of them on order deals. That was the news at least coming in from the Defense Ministry. They both bagged order deals. They've both been doing very well. Markets, by the way, are closest to its days highs. They're doing. It's been a fabulous recovery. So we'll come to you on that in a bit as well. But in this space, in the defense space, anything you like, Kunal? Views on Cochin Shipyard? Still value left over there. Same for Mazagon.
Yeah, I think overall we look at the entire defense space. They have done extremely well. So I think there are only select a few names which are available where we can see further upside. So yes, as you mentioned, Cochin Shipyard is something which is still looking very good on the technical chart perspective as well. We are seeing on the technical charts a high low formation which is still intact here. So I think there could be a good upside of currently 10% from the current levels as well. So 1295 is where the currently stock is trading. The support what the stock has formed on the downside is at around 1200. So that would act as a demand zone for the stock again. I am expecting at least on the higher end 1400, 1500 kind of levels coming in the very short term.
Yeah. Mayuresh, I just want to come to you on some of these defense names and defense plays. When we saw that cut and profit booking, PSEs, public sector enterprises, were one of the first to see some profit booking as well. Do you think that there has been too much of a run-up because they've also seen a recovery? Or is there some room left there in value? Anything you're liking over here from a defense point of view?
I think they've run up too much for comfort. I think it's a story for a large part of the broader market.
I'm going to ask you what you think has not run up too much for comfort. Are you in holiday mood, Mayuresh?
Let's forget about my holiday mood. I think a large part of the market is fairly valued. So I think you just have to assume that from fairly valued to how much you probably need to give those overvaluations for. Structurally story, yes, order books are in place. So the revenue visibility for the next 5, 6, 7 years in line. They are probably executing their order book quite decently. And therefore, the kind of margins on which these orders are coming through are also reasonable enough. I was just hearing the VL management was speaking with Niraj in the morning, and they're expecting that margin band of 21 to 23%, obviously getting maintained. The only issue that probably happens is to suffice this order book, capacity expansion has to take place because there is only a certain extent on which your asset turnover will probably happen to have those revenues probably get built in. And that is where my issue lies. On the kind of expectations of utilization levels on its fixed assets and the optimum utilization of asset turnover as well. The revenue that can coming in over the next 2 to 3 years is largely priced in because of where the prices are at this juncture. And the second element, which should not be such a concern, the receivables happening from the government. If the expectation is that this government continues for the next 5 years and the stability in which it is probably having its orders given, orders getting executed and receivables being given out, I think that should have a stable kind of an environment as far as the working capital cycle is concerned. But the sheer need in terms of expanding capacities and optimal use of capacity mean that it's fully priced in is something that my belief is for these stocks. The structural story remains. So anybody holding on can continue enjoying the moment.
Okay. Thanks, Mayuresh, for that. Today I think Kunal was talking about the strength in the FMCG pack, if I'm not wrong. Those stocks have certainly held out. Even on the cash market, on the volume side, I think there is some strength in the likes of Britannia, in the likes of Marico. So I think that's one bucket. Even Dabur, for example, the stock may not have held out, but there is merit in the volume piece for these names. So that's one to watch out for. Kunal, the other pocket which is blowing hot, blowing cold, but off late, the gains or the number of days when it gains, media I'm talking about, the number of days when it gains is a lot more than the days on which the sector at large corrects. So Z is a case in point, yes, but there is Sun TV, which has quietly moved on to life highs a few days ago. The Network 18, TV 18 twins have done reasonably okay in the recent past. NDTV, and the standard disclaimer was a part of NDTV Profit. The NDTV Profit is a part of NDTV. But this whole bucket of stocks on the broadcast side predominantly, but maybe even on the print side, is there anything that looks interesting?
Yeah, I think definitely we are going ahead for elections. So I think there is definitely a momentum which is likely to build up in the entire space as well. So that is where TV18 broadcast is something which is looking still very good on the technical chart perspective. So on the technical charts, it has seen a very big downtrend, and finally we have got a breakout from this downtrend. That means a clear-cut trend reversal is visible. 40 to 45 has been a very strong support zone for the stock, and we have seen multiple bounces in the last couple of months as well. So I think that this could play a very good role from the current levels as well, trading around the zones of 50 and 45 is something where the demand zone is. So probably I can see a rally towards the levels of at least 65, 70 on the upside in the very short term.
Okay, we'll watch out for that, but TV18 is his top idea. The other, just that flash that Tamanna was talking about, AMI Organics. Remember, the stock had a big downtick in trade yesterday because of a deal or otherwise, and now we're just seeing the stock perk up in trade 1145. Earlier, it also signed a pact with Fermion, one of its clients, for supplying to APIs as well. So interesting, and there's just some flashes on the screen about they're setting up a plant and investing about 300 crores in the state of Gujarat. So watch out for that.
So just what that AMI Organics story is, since you're talking about it, they've signed an MOU with an electrolytes manufacturer to make battery cells and allied materials in Gujarat. They will also sign an MOU with the Gujarat government for investing up to 300 crore rupees for this electrolyte manufacturing plant. So it's an MOU as of now. That has got AMI Organics there with a last-minute kind of a bump up.
Yeah, but just that chart was beautiful because it showed just the fall that we saw day before yesterday, and then the sudden spike that we're seeing in the stock today, 6% higher. Before we come to Kunal on this, Mayuresh, do you track AMI? I believe you had spoken to us about it the last time when you were in the studio, but do you track AMI Organics closely?
Yeah. So yeah, and I have a positive view. So let's put that on record. Obviously, I think the positives that are coming through, the MOU that has got signed in, lithium-ion batteries, I think a lot of developmental work is happening, and a lot of electrolyte and electrolyte additive salts is something that are going to get required for mass production of these batteries. So to that extent, the kind of expectation that one really builds in from this space when it comes to batteries and renewable batteries as well on the electrical mobility part, there can be good traction over the next few quarters. Again, I think they're into semiconductor business as well, and that probably also is a very high growing business going forward. The methyl silicate business, which is their bread and butter at this juncture, is expected to pick up over the next couple of quarters. Because even now, what you're probably seeing in terms of specialty chemicals, the dumping by Chinese companies is largely over. But as restocking starts taking place, you're going to definitely see some expansion happening in markets. So this space looks very, very interesting. AMI Organics is one. You probably got Neogen Chemicals as well, which has already embarked upon a capex in electrolytes and electrolyte salts as well, and even Bhansali Engineering. So they are probably getting into the downstream products, which is a complete import substitution at this juncture as far as India is concerned. They are expanding capacities to probably suffice that requirements as well. And therefore, these spaces where specialty chemicals in real earnest would grow at a good pace over the next few quarters can continue doing well. And valuations for a couple of these players are also not that expensive. Just to answer your question, Tamanna, on this space.
Yeah. Let's take a quick view from Kunal. Kunal, I want your ideas, BTST ideas as well. And if you have any view on Tarsons, I just want to pull up Tarsons for a second. So this company that manufactures lab equipment has now acquired through its arm a German company in the same space. That stock has been doing phenomenally well. So two questions for you. Any view on Tarsons on the charts, and what's your BTST idea?
Yeah, I think firstly for Tarsons, if I talk about after being a big underperformer, clearly trading in a downtrend, Finally, we have seen good volume-based buying in today's trading session. Obviously, the stock is up by 13% here. So not at the current levels. If you get any dips toward the support zone of 530, that could be an ideal opportunity to initiate long positions. Now the support on the downside is placed at 500, which could act as a stop loss for the stock as well. I'm expecting this stock to at least head towards the levels of 580 to 600 in the very short term. So I think 530, wait for any dip for Tarsan. That is where one can initiate long positions. Coming to the BTST ideas, what we discussed on the show as well, I think PSUs as a space is still looking very good to me, what we spoke in the start. So PSU banks is something where my focus still lies on. So Canara Bank is something again which has given a sharp recovery from the lower levels. So one can initiate long positions in Canara Bank even from the current levels. We can expect a good recovery of at least 3 to 4% from the current levels.
Okay. Mayuresh, do we have Mayuresh? Mayuresh, just before we thank you, a word on PSU banks. They are, historical biases notwithstanding, there is a case for some of these to do well.
Yes, that seems to be the case. And again, Niraj, I think valuations are not too expensive at this juncture. Again, I think you have to probably be a little bit more selective out here. With the recent RBI circular that has probably come through, there is a certain element that CET1 ratios will get hit. And therefore, there will be some elements of raise that will come through. But in my opinion, because we are looking and staring at a rate cut cycle in the second half of the next calendar year, these equity raises will not be equity dilutive, but equity accretive to some of these companies within the spaces itself. And within the broader basket, I'll leave aside SBI because that might be a consensus call on the large cap name. Might be something like a Bank of India, where you've seen reasonable amount of growth coming through in terms of advances. You've seen asset quality pressures come off quite significantly in the preceding few quarters. And the management sounds very optimistic in terms of a lot of recoveries and upgrades happening onto their book, which will directly add to the bottom line. Provisioning has been reasonable so far, and valuation still below book as we speak. So I think pick and choose within this universe itself. Bank of India is something that we like at MarketSmith.
All right. Thank you for that, Mayuresh. Great to have you on the show. Let's just take a look at how markets are closing down for the day. And I'm just going to get one view from you, Kunal, before we let you go as well. But you are looking at a smart recovery, I would say, across the board on the markets today. After what was looking like a very choppy start, a quick recovery has come in and it has sustained. The Nifty is sustaining quite beautifully over the 21,200 levels and looking like it's going to close up strong. You've had a good recovery in the broader indices as well, whether it's the small cap or even mid cap and micro cap indices. All of them have seen a good recovery. The mid caps are up nearly 2%. So you are edging towards the day's high at close. Kunal, just a quick view from you before we go into market close. Where do you think the momentum is on the Bank Nifty and the Nifty 50 from here on? Looking like we're going to close very comfortably over 21,200 right now.
Yes, I think the momentum still lies on the Nifty index as well. For me, Nifty is somewhere going to close around these levels if I talk about today's expiry only. But going forward, I think the momentum is going to pick up in Nifty. As I mentioned, 21,500 is the immediate resistance. Once that is taken out, the road gets open for 22,000 on the upside. And similarly for Bank Nifty, as I talked about, private and PSUs both are something which on the technical chart looks very good. So even Bank Nifty is headed toward that golden figure of 50,000. So probably it's just a matter of time where we'll see Bank Nifty heading towards that level, and the participation will be there from both the PSUs as well as from the private space.
Okay. Unequivocally bullish is Kunal. Kunal, great having you. Thanks for taking the time out and being with us today. And all the best with your calls.
Thank you so much.
The pleasure was ours having you. Okay, before we slip into doing the final checks on the market, I think it's also important to take cognizance of the fact that there are some individual pockets of strength and weakness in the markets. From a slightly medium-term perspective, some of the EMS businesses also have done well. I don't know about today, but yesterday, for example, Keynes Technologies was doing really well. So we should pull up that stock for you. And let's see what Keynes is doing. Well, currently about 0.22%, but 2749. In yesterday's session, the last 5-day move will show you that Keynes had a really strong outing in trade. So that's one name to monitor. Aside of Tarson's, I think what's done well today is Zensar Technologies, 628, about 10.5% higher. So that's done well. Sham Metallics, I think, is locked on an upper circuit. So just pull that one up for you, because usually we don't talk about Sham Metallics. They're a very small sector with Godavari Power Ispat, Sham Metallics, and maybe one odd company. But this stock on a 10% circuit, I remember pending a block deal, the stock was not moving because the promoter stake is at 81%, and at any point of time in the next few days or next few weeks, those shares might come for selling. But for now, that seems to be doing okay. So interesting moves, Tamanna, at some of the stocks at the broader end of the spectrum.
You know, I just want to talk a bit about what's working in the mid-cap space, and the Nifty mid-cap 100 has recovered smartly. IRFC is one, and if you pull up the 1-week chart as well, this railway finance company has just been showing a phenomenal kind of a performance and continues strong, up 8% as well. Remember, there is a very ambitious railway upgrade plan, so to speak, that the government has in place, and a company like IRFC will have a big role to play in actually financing some of those aims and ambitions. You have delivery doing well as well today, 6% up in trade. NMDC, SAIL, a few others that I would talk about. I'm going to go back to Dr. Lalpath, and your diagnostics have seen an uptick. Perhaps it's a COVID concern. Now a lot of people use those home tests, but yes, it generally is good news for them. Oil India is another stock that we talked about as soon as we opened the show. On the sell side, I think you would have to refer to Prestige, and you're seeing Prestige, Piramal Enterprises, Bandhan Bank. So your realty and certain pockets of finance or NBFC combos are seeing a bit of pain, even as the street is trying to figure out what exactly is the extent of the RBI AIF entire policy plan. Indian Bank is another one that I'd mentioned. QIP has closed today. Stock is down 3.5%. But Niraj, we're looking all in all set for a pretty decent pre-Christmas finish. Sorry, I'm already in the Christmas mode.
As you should be, because the markets are certainly celebrating that, Tamanna. Though we love the Christmas red. On the screen, though, we love green and not red. And that's how we seem to be ending. So 0.5% up, yes. But can we get the heat map up? Because I just want to see the quantum of red versus green. And there you can see there is a very strong tilt towards green. Keep in mind, the Dow futures for a better part of the trading day today have been trading in the green. And if you can just pull up the European indices as well before I hand it over to Tamanna for what's happening at the broader end of the spectrum as well. If we can, let's get up the European markets and see what they are doing. Well, not so much, but remember, Europe didn't have as bad a day as the Indian markets and the US markets did. So in some sense, India's recouping some of the losses of yesterday. Europe is a bit soft. Dow, after the crack yesterday, the futures are marginally in the green, at least the last time that I saw. So good going, and which is what explains the largest shade of green that we have in our markets today. Very strong shade of green, very few losers, a lot of gainers across sectors, which is a great sign, and the advanced decline ratio looking very positive. But the markets have shut, and we've shut about 130 points for the Nifty. So good going there at close. 130 points up for the Nifty. From the day's lows, I think over 300 points for the Nifty. I would reckon well over 1,000 points for the Sensex as well. So no complaints at all if you were bullish on the markets. And no complaints, Tamanna, I presume, if you're bullish at the broader end of the spectrum.
Absolutely. Broader end of the spectrum, you've had some complete whoppers. Hindustan Copper is one of them. Tarson's we've been talking about. Oil India. All stocks that have seen a very smart move. Hindustan Copper up, closing up about 10%. Tarson's up 14%. Your new listing, Inox Industries, has held on to its gains as well during close. Z has closed smartly, after all of that seesaw, and we'll have to wait and see what happens there. In fact, the only loser in the entire media space is PVR. And everything else is done pretty well. Diagnostics, Metropolis has had a superb session. IRB Infra continues to see, the upswing after we've had news about new orders that they've got, or new places where they're going to expand their operations. Even some of the smaller banks have recovered sharply. UCO Bank is one that definitely comes to mind, considering that it was down and out a few days ago. What's not done too well? I would say let's look at Easy Trip, let's look at MRPL, BKG Food. So some of those counters are weak. I just want to see how Varun Beverages has shot. So Varun Beverages, of course, had great news coming in. They're also expanding. They're going global. A clutch of Indian companies have now started looking at global operations, and you're seeing the market reward those ambitions. Varun Beverages, one of them, and they've also closed about 3.5% up, near the day's high. So all in all, a good end to a day that started with a lot of apprehensions. But if you tuned into NDTV Profit since the start of day trade, you would have been well prepared for what's to come, because that's the message that came across from all the experts that we spoke to, that you need a bit of a cut to jolt you back. Niraj, I think that's the big message. That a bit of a pinch once in a while for a market on such a upswing is good.
And can always happen. And can happen any single day. Who knows? It might happen tomorrow as well.
Yeah.
But yeah, I mean, just what is heartening is the bounce, to be very honest. And it's great to see how well and how broad-based this rally is, because it's not a narrow one which is pulled by banks alone. In fact, banks have hardly been there. IT has hardly been there. And yet, we are about 0.5% up, which is actually a really strong sign. So, well, good going.
Yeah, good going. And we'll wrap it up here on India Market Close. But stay tuned. A lot more coming up on the other side on NDTV Profit.
Thermax has been into existence for the last 6 decades. However, they find themselves into a very unique space, just like any other corporates, as they align themselves with India's Sustainable Development Goals, first for 2030 and then for 2070. They have a lot of green energy products in their portfolio, and they are planning to partner with the clients as they move towards energy transition. We have with us Meher Padamji, the chairperson of Thermax Group, with us today. She will talk to us about their plans and the way ahead. Welcome to NDTV.
Thank you. Thanks, Vikas.
Ma'am, we are aware about the business that Thermax has been doing for the last 55 years. But how do you see in the current changing scenario the next 20 years or 10 years for your company? What is your vision for that?
So first of all, thanks for having me here. So Thermax has always traditionally been in energy and environment. It's something that we truly believe in right from the time that the company started. And our tagline at that time was conserving energy, preserving the environment. So we've continued with that. Today we've shifted it a bit to conserving resources, preserving the future. And so Thermax has always been into industrial utilities. So providing clean air, clean water, clean energy to some extent. But today we are putting with the climate change, with the sustainable development goals, and what's happening to our planet. We are genuinely trying to see how do we move the organization to think in terms of how do we make things far more efficient so that we reduce CO2. How do we continue our journey on energy and environment, but how do we move into newer areas as well, which is renewable energy. So we're looking at wind, we're looking at solar, again for industrial and commercial clients. So for our own industry customers, how do we bring them into a group captive and provide them with solar, wind, as well as hybrid solutions. So that's one area that we're looking to grow. The second is we're looking to grow on build, own, operate for our heating systems, for our water systems. So how do we put up plants which are completely green or clean, and how do we sell it as a service? So how do we sell heat instead of sell steam instead of selling a boiler? Or how do we sell clean water instead of selling a water treatment or a wastewater treatment plant? So we're looking at these aspects in terms of the build, own, operate. So this forms our green solutions business. The second is we're looking at industrial infra, which is mainly our large projects. Again, how can we look at them in a much more cleaner and greener manner? So we saw one example over here, which was FlexiSource, which is a boiler that today can operate on 140 different types of solid fuels. So with a digital platform, the customer can actually say that I want to burn this, 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 and this together. How can I do it in the most efficient manner? So we've got a solution for that with a lot of environment products in order to clean the air that comes out from the boiler. So like that, we're moving. In our industrial products, we're looking to see again, how can we supply clean heat, clean water, clean air. So in every bit of our industry today, everybody in the company is thinking clean, thinking green, thinking more energy efficient.
So next 10 years, what you're saying is that it's going to be mostly focused on green, basically,
Absolutely.
as sustainability becomes the best.
Absolutely.
Yeah.
Green, recycle, how do we look at waste to value? So we're looking at all those areas right now. Yeah.
So as you spoke about sustainability and your focus, so what is going to be the role and key theme that will be driving Thermax in the coming years?
So we want to really be trusted partners for our customers. So earlier, there was a lot of product selling. Okay. Having said that, we were always application oriented as a company. So we would have a product, but we would look to see which application does it fit into in a customer's industry. Today, a lot of it, because it's so up in the air in terms of what will really succeed, in terms of green energy, we really don't know. Is it going to be hydrogen? How is bio-CNG going to go forward? How are solar and wind going to go forward? We really don't know. So in that case, we go to customers and say, you have a challenge. Can we help you to get rid of this challenge? Europe is going to come up with a carbon tax. We have to supply things from India. People are going to have to look to see how do we make it carbon neutral. So we have to work very closely with customers and partner with them to see how to get rid of their challenges. And that's really going to be our tagline also, which is to be a trusted partner in energy transition.
Yeah, you spoke about these 4 companies, bio-CNG, bioenergy, renewables, then on-site, and also your industrials. So in terms of these subsidiaries, how do they impact your overall performance, say, going ahead? If you cannot talk about numbers, at least in terms of, their performance impact on the company.
I think all of them are, first of all, growing. I think what is growing quite rapidly is our green solutions business. Having said that, that's the one that needs the maximum capex.
Right.
Yeah. So in some ways, it gets limited by the amount of capex that we put in from the company, because it's a build, own, operate. So we have to put in our own equity. Yeah. So, but that's all 4, whether it be chemicals, whether it be industrial infra, green solutions, or industrial products. All 4 are growing well right now. I think India is really doing well at the moment, it's in a sweet spot, let's face it, compared to the rest of the world. And so there's a huge amount of internal consumption that's taking place, because of which there's a lot of capex coming in. Government is putting in policies for a lot of capex. There's the China +1 that's happening. So I think there's a lot that's actually happening in India. And our business is like a derived demand. So say, for example, the government spends on roads. If you spend on roads or any infrastructure, you need a lot of cement, you need a lot of steel. If cement and steel is needed, they need to put in capex. They come to people like us. So it's a derived demand. And India is doing well at the moment, yeah. So all 4 sectors that we have are doing well.
people are also talking about circular economy. So which of your projects will really help in creating that kind of circular economy, where...
Yeah, so because I think circular economy is again something that we have done quite a lot of always. Okay, so in fact, we go in to say, how do we look at your waste heat and how do we bring value to the customer out of your waste heat? So that's like a circular. Okay, so I mean, just my favorite example is potato chip frying. Okay, so over there we went in and we saw that potato chips, when you fry them, there are fumes coming out. The fumes have heat and they have water vapor. So through our vapor absorption chiller, we use that heat to produce cooling and we condense the water to give it back for potato cleaning. Yeah, so I mean, I am fascinated by my own people and very proud of the kind of applications that they come with, and so that's circular economy. If you look at bio-CNG, we're trying a circular economy there, where there is, on the one hand, there's huge amount of pollution. There are people who have respiratory problems because of that pollution. And it's also not very good for the soil, what they're doing in terms of burning stubble. So if we can take this stubble and we can actually put it in a digester, create bio-CNG, we are solving so many problems. What comes out of the digester, the digestate, can be used as manure, which helps the farmer. And of course, the gas that comes out can be used for mobility, so we don't have to import.
And also create briquettes.
We can create briquettes. So there's a lot. So many of our products and applications are constantly looking to say, how do we utilize waste and bring it back to create some value.
We also saw in the space of mobility where HVAC that you all have created.
Absolutely, yeah. The waste heat that is going to go from buses to produce cooling. And then, of course, for bio-CNG, we are also creating local employment. So I think the whole stakeholder approach with sustainability at the core, I think is where we are coming from.
Yeah, so most of these projects where you come up, big capex, large capex go into it, plus also requires a lot of rehabilitation plans and also community development plans. So what's your role there? What kind of community development activities you all have taken up, Because most of these areas also come up in rural areas, tribal areas.
Right. So, we've, first of all, we have 10 manufacturing locations across India. So through our CSR, we have projects for skill building around that area. So, for example, we've trained a lot of people to become welders, especially women welders. So we've tried to do that. We've tried to build, give them skills of becoming fitters, giving them skills of working in a chemical process industry. So we're trying out different skill sets, although I'm not very happy with it because I find that people still get 10, 12,000 rupees. How can we increase that to much more? And also, how can we get them to stay in an industry? They stay for 3, 4, 5 months and then quit. So we are working on that in order to match what they are really interested in with what is required in that community. So that's one type of project. Another very interesting project that we are doing right now is on it's called SOCO, which is Social Compact. And that we're doing within the company to see that we have so many unorganized workers at our sites. Migrant laborers. We have thousands of them working at sites. Can we look at, do they have decent places to stay in? Decent. Do they have toilet facilities which are decent, especially women? I mean, I feel bad that when I go to site, I've never really thought, is there a facility for a woman to use? A clean facility. Can we, which we spoke about earlier, can we help them to be aware of the various government entitlements that they should be, things that they should be entitled to, government schemes. So we're working on that. Can we look at gender parity in terms of salary? So if a man and a woman are doing the same job, can we make sure that we give their wages the same? Can we make sure the wages go on time? You know, very often a contractor subcontracts it to another contractor, and we have given the money, but have the people on the ground actually got it on time? Have they got an agreement in place in a language that they understand, so that they know that this is what is my agreement with the organization? So, you know, little things like that we're trying to see, can we improve on?
Okay. Yeah. So one final question, or the second last question maybe. Everybody wants to know, like your mother has created this legacy for Thermax, very well carried forward by you. So what is going to be the next succession planning for Thermax, and who's be the most suitable candidate for taking it forward and ahead?
I don't know who will be the most suitable candidate, that I don't, but let me just step back a little bit and say that Thermax is a very professional organization. So we have non-family professionals that are running the organization on a day-to-day basis. Okay, so Ashish is running it and is whole and soul responsible for managing the organization. So we have separated ownership from management. Okay, for our generation and the next generation who are also in the business today, both Feroz and my daughter and son are in our business. They have also decided that they would like to separate ownership from management. So what do they need really? They need to understand the business enough for them to ask the right questions when they come onto the board of the company. They need to be responsible owners, as they themselves put it. Yeah, so they're both in Thermax right now. They both have different responsibilities way down the line. They're learning the ropes. And Feroz and I, of course, when they come home every evening, the talk now for all 5 of us, with my mother as well, is on business, because we're all in it in that sense. But it's very nice to see that they, at least for the moment, they want to be a part of it. And but as I said, succession it's the family succession. But as I said, the business is run by very capable professionals, non-family professionals.
Okay. And one last question. Overall, how do you see this business landscape to change, in coming years? And what's the kind of potential you see for Thermax?
Oh, I think, as I said, first of all, India's in a sweet spot right now, okay, which is great. I think our policies are in the right direction in terms of the country wants to look at being cleaner, greener. Having said that, as we've seen, coal is a major component as a fossil fuel, but Thermax has a technology to use that as well in terms of coal gasification. So I think Thermax is also in a very sweet spot. And I don't know if I can say everything will succeed, because that's not the way life is. But we are working on many, many different areas, and in some ways de-risking. So some will succeed, some may not succeed. But right now we're working on all the areas in terms of becoming a trusted partner for our customers in the energy transition space, in the recycle space, in the water space, in the pollution space, in the chemical space. The whole thing is so integrated as far as an industrial customer is concerned, that I think that's where we are really putting in all our efforts.
Thank you very much for talking to NDTV Profit. It was our pleasure, ma'am.
Thank you. Thank you very much.
Thanks for tuning in to NDTV Profit. You're watching The Reporter and I'm your host Pragati Oberoi. Let's take a quick look at the top stories of this hour. Markets rebound after the worst sell-off in 10 months. All sectors end in green. After Piramal Enterprises, IIFL Finance announces its exposure to AIFs, says it's worth 182 crore rupees. Inox India makes a strong debut, lists at a 44% premium, closes over 42% higher. India's COVID cases surge as India reported 358 cases in the last 24 hours. Before we delve deep into each of the stories, let's do a quick market check as to how the markets fared during the day. Let's have some charts pulled up on our screens as well. After enduring a sharp fall yesterday, the benchmark indices closed in green, with Nifty closing 0.62% higher as well. You can see the chart on your screen as well, and something similar can now be said for Sensex as well. The broader market too had a good day for the trade. As we can see on our screen, it ended in green, with Nifty mid-cap 150 closing 1.56% higher, while the small-cap index also did pretty well. Let's also talk about the sectoral review. As we can see at a couple of charts